My name is Oindamola. My name is Oindamola Adeleye, the founder of AGH Consult. So, at I know some people might have heard of us, and if you don't know about us, apologies for my voice. I'm a bit under the weather. Like I said earlier, if you know some people that should join the webinar, you can share the link across with them. So as I said earlier, today we are hosting our monthly Today we are hosting our monthly webinars, and for our community members, they're already aware of our monthly webinars, right? So today we are bringing another version of our monthly webinar tagged. I'll still get to it, but in the meantime, let me introduce who is organizing this webinar. So as I said earlier, I'm the founder of AGH Consult. So what do we do at AGH Consult, right? Pending till we wait for more people to join. So who are we? At Accounting Job Hub, we provide accounting vacancies, career advice, career tips, trainings, and workshops as they relate to the accounting profession. Also, we provide learning and personal development materials and resources for professionals in the field, and we also help firms recruit accounting professionals for diverse positions such as interns, account officer, accountants, finance managers, and the likes. So one of the reasons why AGH came about, or why did we set up AGH? Who's that? Sorry, apologies. Okay. Apologies for that. So AGH was vetted out of the need to bridge the gap between the skills required from an employer and the skills lacking. So we know that there are a lot of accountants, finance professionals that don't have the skills for the job they're applying for. So what we are trying to do is to bridge that skill gap to help skill up these people in form of trainings, in form of this kind of monthly webinars. I think I'll have to remove this person from the call. Um, Please kindly mute yourself or we remove you from the call. Um, as I was saying, AGH was vetted out of the need to bridge the gap between the skills required by employers. Like, we know there are a lot of accounting professionals that want to progress in their careers, right? They want to reach higher roles, they want to switch and a lot of things. So what we do at AGH is to empower you with the resources, the information, whatever you need to help you achieve that goal, right? And that over the past 2 years, that's what we've been doing in form of our trainings, free trainings, paid trainings, our courses, our webinars, our informations, our posts, and a lot of things, right? So for people that don't know us, welcome to AGH Monthly's community webinar. And we're having our monthly webinar. We do it once every month. Our free webinars are once monthly, and that is usually towards the end of the month, right? Please kindly invite more people that you know that needs to join the webinar. And I feel the low turnout was or is as a result of people currently in ICANN classes and all. So we understand that. So today we'll be diving into our webinar topic stated or titled, please hold on, I don't know why I'm having issues with my phone. Okay, titled Maximizing Business Performance with Financial Analysis. So we have Mr. David Shonibare on the call, and I'll quickly be reading his profile, right? And after the session, we can get to connect with him on LinkedIn and any other place you would like us to connect with him, right? So introducing Mr. David, our speaker for today. So Mr. David Shonibare is a senior finance and account officer at the Lagos State Center for Rural Development, a parastatal under the Ministry of Local Government and Community and Rural Development. Mr. Shonibare is a seasoned financial analyst with over 8 years of specialized experience in international financial reporting standards, international public sector accounting and standards, budgeting, forecasting, financial modeling, business valuation, business analysis and strategy, finance statement analysis, corporate and individual taxation, and information system audit. Is an associate of both the ICANN and ACTI, that's the Institute of Chartered Taxation of Nigeria. He holds an OND in accounting from the Polytechnic Ibadan and BSc from OAU. He's currently pursuing his master's degree in finance at the University of Lagos. So, in his role in the Lagos State government, Mr. Shonibare has actively participated in several budget bilateral meetings, appropriation meetings, and budget defense sessions at the Lagos State House of Assembly. His extensive experience in the public sector is driven by a passion for public accountability and future ambition of holding a public office. Beyond this public sector responsibility, Mr. Shonibare serves as a consultant, offering advisory services to SME in areas such as taxation, dues, and financial reporting. Additionally, he is a dedicated educator, having lectured at top tuition houses of the Institute of Chartered Accountants of Nigeria and CITN, specializing in strategic and advanced financial management, corporate management and ethics, financial and corporate reporting and taxation. He has successfully guided numerous students to excel in their professional exams and career. So, make welcome with me, Mr. David Shonibare. So, the next person you'll be listening to will be Mr. David Shonibare. Thank you.
Thank you so much, Loinda. I really appreciate the opportunity to be here this evening. Good evening, everyone. I guess they can all hear me clearly. And sorry about your, the weather. That it actually messed up your voice, Loinda, because we were here last week, also in a webinar like this, and the energy was quite astonishing. It was electric compared to what I'm having today. I could actually understand. Sorry about that. We are humans, and at times it can actually play on us. Okay. Thank you so much, everyone. As Moinda has actually introduced me, I'm David Shonibare by name, and I'll be the one championing this particular topic for today, right? So I'll just take some minutes to display my screen. So let me just I'm going to switch on my camera. I just intentionally had to come on, show my camera so that show my videos rather, so that everyone could see the person that has been introduced. So it promises to be a very interactive session, and it promises to expose us to a whole lot of advantages, even as a profession, as an accountant. Some particular areas that you are here to tap into, that you could actually even milk out income for yourself, or probably some particular skills that you could actually gain that will help you probably to get a future job, or probably that could actually elevate your career, or could actually help you be on your own. Like she introduced me, I have the opportunity of working with the Lagos State government for about 10 years now, close to 10 years now, about 9 years and 6 to 8 months. And within that particular period, it's been a very interesting period, because people get to ask me how do I work with the public sector and still have opportunity to do some of these things I get to do. And it's something that I always tell people, that is your drive, it's your passion for what you want to do, right? It's your passion that you want, that actually keeps you going. It's your drive, what you believe. I was actually able to stumble on a particular post the other day where someone said that when you are still trying to maneuver your way in life or your career, be open to any role. But once you know what you want, do not listen to any other thing. Just focus and do everything that would actually contribute to you achieving that particular goal of yours. So that's what have actually motivated me, and it's one of my driving force. I'm like everyone who knows me on LinkedIn, I'm very passionate about finance, and I'm very passionate about accounting at the same time. For someone that came from an accounting background, a diploma in accounting, a BS in accounting, someone transitioning into finance now. So it's something that I can actually tell you that there are some areas in accounting that we accountants are still having this kind of we are still having this kind of slack on. We've not been able to tap into it, and it's very important for us as accountants. We are being seen as number crunchers, and which is not so. And that's the essence of financial analysis. So, me being here today discussing how you can actually enhance business performance, for using financial analysis is something that I believe could actually help us. I believe we are not only having accountants in the house, we're having those that are actually passionate about businesses. It will also help you. It's not only accountant that actually can do this. Understanding of all of this could actually help you upskill your business, right? Over time, I've been able to speak to business owners, several business owners and all of that from experience. And, we understand some of their challenges, right? And some of these things are what have actually culminated into me coming up with some of these things I'll be talking about today, right? So it promises to be an engaging period, and it also promises to be an interesting one. And I believe at the end of this, I'll get good reviews, and I will get, I believe you guys will be taking something away from this particular session, because that's the essence of we doing all of this. You could have actually used your time to do something else. You could have actually watched, probably catch up with a movie. You could have actually used your time to do something maybe relaxing, but you are here, right? You are here trying to upskill, you are trying to learn, because learning does not end. And that is the major reason why. So we have to make it worthwhile while you're here. So let me just take some minutes to display my presentation, my slide. So I'll go off now and display my presentations, and that's what I'm going to stick on throughout this particular session. So once you can, let me use this method I use in my class, because I do also ICANN classes online, and I'll actually take it. Permits me to take it like I'm teaching, because I'm a teacher in the real sense. And if you leave me here, I would actually, that's the way I do. So I'll take this webinar as like I'm teaching. So please, once you can see my screen, just do me a favor. You just go to my chat box and do me a favor, go to my chat box and type 111 once you can see my screen. So I'm sharing my screen right now. So once you can see my screen, just go to the chat box. Give me 111. Let me know that we are together. Just give me 111. Okay. Okay, good. So I think I'm getting some 111 already. Very good. Very good. So that's very nice. We can all see me there. Let's start with an introduction. With my introduction, I like to share a little story, a little story, like maybe something that could actually gear us up for this session. When I got into the public sector because I got into the public sector, I was just a probably young, I won't even call myself a professional, someone that was still trying to maneuver his career, someone that was still trying to gain leg, right? Trying to understand what I really want, because I always had this passion for public sector, right? But I was not really sure of what I wanted, right? I wanted to understand my actual career direction. So it was very important for me to sit down and weigh my options. So in 2015, when I got into the public sector, I was just done with my ordinary national diploma. Many of us that went for polytechnic, that went to the polytechnic, you understand that after your ND, you have to go for a compulsory 1-year IT. And of course, I was able to get the employment into Lagos State government with a parastatal where I still work till today. And in that particular year, I think the second week, I think I got into the public sector. The first week out, you still try to familiarize with the system, understand how things are being done and all of that. So the second week, I got introduced to some things, the accounting processes, how we go about this and all of that and this and that. So in my second week, I had already familiarized myself with how the accounting processes over there works. And one thing I was able to pick from all my observation was that there were so many, manually done work. Like there's so many manually done work, and the way it was being set up, it was very hard to actually drive decisions, right? It was actually hard to actually determine what the accounting department was actually doing. So in my first, I used to tell people I was in Ilorin, I was in Uni Ilorin the other day for a particular accounting conference, and I was actually sharing the with the students that it was a particular session on the panelist session on AI and automation, how it actually helps. So I was trying to bring the student in and make them understand some things with AI, and I shared this particular story that I'm sharing today. So what I did was in my first 6 months, I tried to automate the processes that you understand why I'm making mention of automation, right? Because we cannot talk about financial analysis in this age and we are still backward, right? You need to, I'm very, very, there's someone that I respect so much, David, the owner of the Brown Consulting, is a key mentor for me. And he said something in one of my classes on financial modeling. Then he said something that a lazy accountant is an automated accountant. And I picked that word. That a lazy accountant is an automated accountant. It's not in the real sense, you are not lazy. The reason why you say you are lazy is because they are calling you a lazy accountant is because of you are fully understand how to make complex work easy for you. So that is the major reason why I'm starting from automation, right? So I want to narrow our mind down from manual way of doing things right to automation, although that's not the major thing that we need to consider in this particular webinar, right? The essence of this webinar is to focus on financial analysis. But what I'm trying to drive towards is that without understanding how automation, how modern day tools work that could actually help with financial analysis, then you are not ready for financial analysis, right? So that's why I'm actually sharing this. So in my first 6 months, I noticed I reviewed some files. I noticed there were so much tax queries. You will want to say why? Why is it? It's not government establishment. Why is it that there are so much tax queries? I noticed there were discrepancies with the filing of personal income tax and some other tax, withholding tax and VAT and all of that had been done during that period. And the LIRS was coming, right? Even though the FIRS had not come, the LIRS had written a letter that, oh, we need to come, we need to do a field audit. And you know what it means? What it means if you are doing a field audit. And those of us that are in the tax area, you understand what I mean with all of them. And they were actually coming, charging at us. They had actually written a letter where they were actually telling us that our assessments were actually having huge variances with what they had actually assessed. So we forwarded a whole lot of book. And as a IT student, someone, although I was already done with probably I was at the final level of my accounting technician scheme, some of these things had not yet been open to me in practice. But then I had heard of the word financial modeling. I have started learning Excel, and I've started, because I knew where I was heading towards my career. I started learning all of these things that could actually help me. So it put me on a very comfortable position. And it was very hard, someone that just came in as an IT student, having to talk to the directors of accounts, finance and account departments, level 16, level 17, people that understand how public sector work. You're just an IT student. And I reviewed some of the files and I was checking. I noticed that manual computation was one of the major reasons why all of these things were happening, right? So I did something that really helped. I came in, and that was where I was able to leverage my basic understanding of Excel and all of that. I automated the process, the payroll process. I automated with my basic understanding of Excel using some little, maybe like conditional formatting, some ifs and count ifs, just little things, concatenation and all of that. I was just able to automate, my understanding, or automate the processes, right? And their payroll system will be, imagine doing your tax computations, calculating personal income tax on Word. So you could actually understand all of this. And at the end of everything I had done, I came up with just a little thing to do an analysis. That's where I'm heading towards, right? I did a little analysis on the causes of the discrepancies and way forward, and I gave it to my then head of accounts, finance and account department, and he looked at me. He was shocked. The first question he asked me was, am I currently doing my ICANN, or am I chasing any professional qualification? And I said, well, I was not yet doing my professional ICANN qualification, chasing my ICANN professional qualifications, but I was you know, I came up with, I did a comprehensive in the public sector. I'm not saying this was not something done in the private sector. It's in the public sector. I came up with, a whole lot of recommendations that, this is what can be done. This thing I'm talking about is far back as 2015, right? So I came up with several methods that they could actually use, and till today, it is still in place. And even the financial statement as we speak are being prepared using automated tools. So that is where we are driving towards. You need to be open-minded when it comes to financial analysis. Yes, the figures do not speak. Do you get? Many of us that have written Institute of Chartered Accountant examination, or probably you have written some other examination, maybe CIMA, you have written ACC examination, you will notice a trend of what is going on now. They understand. In fact, when I was being inducted as an AC, there was a particular major paper that was being presented that day. I can never forget. The paper was, in the 21st century, will accountants be replaced? And, based on everything that the recent developments, the trends and all of that, will accountants be replaced? And, there were different opinions, different assertions. And what I could actually picture from that was that you cannot replace the work of an accountant. I'm telling you, the figures cannot speak. If you use some particular automation tools today and probably use AI to generate reports and all of that, the AI reports might not, it will still need your inputs, right? So that is major reason why it is very important to understand, when you are understanding financial analysis, it's very important to gear your mind towards automation, right? I have a particular session under this that I'm still going to critically deal with this. Now, let's come home. That was just an introduction to prepare our mind ready for this session. Let's come home quickly. What is financial analysis? It is very easy to understand. I go to in my company, for example, in my office, for example, now we generate IGR for the state governments, and we have quotas. We have ways that we have different things that we do. My office is a self-accounting unit. Many of us are familiar with our public sector work. So we generate reports, we generate all of that. Now we generate income for the state government. Now, when we are looking at a particular area, there's a particular area of our revenue. We noticed that a particular month, we remitted so much revenue in that particular area. And, we are trying to understand what has actually caused this. That is financial analysis. We are trying to understand what could have possibly led to, of course, our capacity did not increase. The same thing that we've been doing in previous months is the same thing that we did in that same month, right? But we noticed that performance improved in that particular month. And, every month we submit a particular return. We call it income and expenditure return, or let me say returns on revenue and expenditure returns to the Ministry of Economic Budget and Planning, where we analyze key variances. We do something called monitors and all of that. So we send it to the ministry. And when we are doing all of this, it was very important to identify in that particular month what could have caused it, right? And that's the process of we trying to explain or evaluate what has caused certain scenarios, or what has caused, or what is going to lead to subsequent future period, what will actually future period hold. Then we are trying to do financial analysis. So we are just trying to evaluate the business health, performances. When we say health, we are looking at how the business is doing. So performances using financial data to make relevant inferences. Now, when we say inferences, it is very important that when you have data from information, you get data and all of that. So the thing is, when you understand how the data is being set up, how you get your data, and this data that we're talking about, you need to understand that is what makes you a good financial analyst, right? What makes you a good financial analyst is the understanding of the data itself, not the inferences that you are making from it. If you are able to understand the data itself, how it works, how you actually interpret those data, then don't worry about your inferences. You will make a very good inference from those data, right? Now, in this particular webinar, we will talk about various components. We are going to talk about various components of financial analysis. We are going to talk about various tools that could actually help with financial analysis. And of course, I have a very practical case study, a proper financial analysis work here that I would display for learning purposes. And that's what we are going to be using for. Let me go to my next. So why is financial analysis important? Why is financial analysis important? Just a moment. Let me go to my next slide. Okay. Now, why is financial analysis important? Financial analysis is important because with financial analysis, you could actually make ranges of decisions. So around last year, I was opportune to like consult for a startup. It was the let me say it was a close relative. So they were about to, the person just collected their his or her pension and was looking at a viable project to actually invest it into, just a portion of that particular money, not everything, to invest it into. And so they reached out to me, and I gave various areas that they could actually invest into. And there was a particular business opened at that point in time. It was a franchise, a store, like let me say a restaurant franchise, and the person was about to purchase that franchise because of those that were actually running that franchise happened to be someone that was actually traveling out. So he wanted to like give total control of that franchise to whoever is buying it, right? And that franchise is in a particular university. Probably because of confidentiality of my clients, I might not want to unveil it. I might not talk about the name of the business. So, and I actually assessed this. I sat down, even though I did not initially, normally at times there are biases when there are some particular professional judgments that it's called professional judgment. Don't let me call it bias, right? Professional judgment that you would take merely seeing something. So I just asked certain questions, and from the questions I actually asked, I saw that franchise is not viable, right? It was one of the things I noticed was the franchise was only run in 2 locations, and those locations had big I was able to relate to the macroeconomic environment, and that's part of the things I'll be talking about. Macroeconomic environment, being able to forecast, certain or to make to call some particular variables or some particular model, get a particular model that will ensure that you have some external variables that could actually influence that decision that you want to make. So I related, many of us have done case study. This is what we usually refer to as relating to wider context. I don't know if you have heard of this before in case study. So case study in the final level of Institute of Chartered Accountants Nigeria examination. So, macroeconomic analysis involves you understanding GDP, inflation, understanding some pestle analysis, the legal environment, understand the political environment. So I was of the opinion that, okay, this is a franchise that is being run currently in 2 locations, and those 2 locations have opportunity of determining how that franchise is going to go out or how it's going to go, right? So I actually assessed the amount that it was going for. The amount was undervalued, right? Based on some of my analysis, it was undervalued. So I felt, okay, it's good for us to actually assess the macro, and that was where it failed it. Right, I don't want to go really in depth because I'm trying to protect. I don't want to, confidentiality and all of that is one of the things that guides my profession, right? And I actually determined something when I assessed the macroeconomic environment. I gave 2 things. That the political environment is quite shaky, and with time, you don't know what would actually come into play. I envisaged subsidy removal, which could actually have a very major effect on food, because of it was a food business, and for a particular franchise, the where she was actually purchasing the major franchise was in a school, right? And it's the school, actually the private university. It was a seasonal revenue, right? And when the students go on break, I noticed the revenue from the historical data that I got dropped. So all of my analysis and all of that, because of it was a family member. Someone used to say something that because of you come from, they know you very well, they will not respect some of the things that I enlisted a whole lot of things to consider. I said, okay, probably because of it was a close relative, they did not take it. And today, I don't want to do it like I'm mocking the business. I know that they are actually struggling. I assess the controls that have been put in place, right? So this is where financial analysis comes into the game. Many of us, we understand how financial statement works, we understand, but do you understand certain components that are very key to you doing your financial analysis? Financial analysis goes beyond just your metrics. There's this particular um, let me call it a report that is being currently developed by the IFRS. Their exposure draft is out for it since I think about 2 years or 3 years ago. It's called management commentary. And I love management commentary so much because of it does not, it's in fact, if management commentary comes into the field or it becomes a compulsory IFRS reporting, right? I'm very honest with you. It has made in fact, many financial analysts are going to milk out so many benefit from this because of I see management commentary as a report that is just like financial analysis. Imagine a report that does not only look at your historicals, it also considers your future, it considers your risk that you're exposed to, it considers your prospective, in fact, threats in your environment. I don't know, many of us have heard of management commentary. In fact, management commentary goes far as even talking about the strategies that you want to implement and how you think those strategies are going to play out, right? So can you see, we're already doing financial analysis. Now, one of the key things that you need to understand when it comes to financial analysis is financial statement analysis. Because of, let's be honest with ourselves, we want to, whether, there are three key business decisions. Okay, it's no longer three, it's now four, right? There are three key business decisions that every business, if you have a business today, you must take. You must make financing decisions, how you source for fund, right? How to be on your business, right? And you also need to make investment decisions, right? Because of where you have gotten those finances, how do you ensure that those finances keeps coming, bringing in, yielding necessary earnings or income, right? That's your investment decision. Then three, you also need to make dividend decisions because, of course, the essence of the business is how you can actually repatriate your earnings or your profits, right? And the last one, which has just recently been introduced, I don't know, it has always been there, probably you did not understand, is the threats. You have to make decisions on the threat, which pertains to risk. Because of for every business that you're running, there are always risk attached to it. You cannot tell me anyone is having a business a risk-free, right? So it is very important. You are running business today, you're exposed to different risks. So you need to understand that you need to take decisions in respect to risk, whether, and that is the major reason why when you check any corporate governance framework that you have, whether it is Sarbanes-Oxley, whether it is any other corporate governance, even in the Nigerian FRCN, Financial Reporting Council of Nigeria, corporate governance guidelines, you will still see it there that it is very compulsory for you to establish what as part of the committees in an organization. There's something called the risk committee, right? The risk committee, and the risk committee is very important to the company. So that is why we say you no longer make 3 key decisions, you make 4 decisions now. So whether it is risk pertaining to your business, those particular inherent risk, because of in as much as you are coming to that business, you are coming with that risk. Everybody knows that if you are going to run an aviation business now, you are exposed to weather condition risk. At times the flight might not be able to hold. You are exposed to various risk, that right? Those are business risk. They are pure risk. And you're also exposed to financial risk, right? Isn't it financial risk that is coming from your method of financing? Today, in finance, you hear things like, gearing, ungeared, asset beta, equity beta, but that's not what I'm going into today. I just want to, it's just because of, I'm trying to explain some things. That's why I had to just touch it, right? So it's very important to consider some of those decisions. Now, when you are looking at your financial analysis, it's very important to understand the key financial statements. The key financial statement, which is the statement of financial position, the income statement, and the cash flow statement. Are there any other financial statement that you still need to look into? Yes, but that's why I called it the key financial statement, because of majority of all what you are going to be doing will be from there. And that is the major reason why in finance, I'm an accountant, from background, but I've actually transitioned into finance, probably because of my love for finance, right? So, and in finance, there's something we normally do. It's very important. Whenever we want to make decisions, we want to make decisions that actually, probably it's for a strategic decision, maybe for a restructuring, probably it's for raising a fund, probably it's for a mergers or maybe acquisitions and all of that. It's very important for us to consider the financial statements, and that is the major reason why we need to restructure our financial statement. right? And you notice that when we are restructuring, many of us that are familiar with all what I'm talking about, you're in the finance field, you understand that we need to restructure our financial statement. We need to get those basic assumptions and make those basic assumptions. It's very important if we want to do financial analysis, right? So the slide I have today that I'll be displaying that later on, we just peruse through it, is a full completed financial analysis on, I think, a particular company. We'll get there, Guinness, and it was done by someone I respect so much. I would have used some of my previous work, but I just checked. I don't want to be caught in the act of divulging certain informations I'm not supposed to be divulging. So I actually went to download one of these great person's work on ResearchGate, and which I'm going to be showing display as we move on. So we need a statement of financial position. Understand your statement of financial position. I'm about 2 weeks ago, I was in my HiCAN class because I lecture corporate reporting at the I lecture corporate reporting and strategic financial management at the professional level. I also lecture public sector accounting at the skills level of the institute. So I was in that corporate reporting class, and I was talking about the regulatory framework, and I was also talking about some particular basic understanding of the financial statement, talking about revenue. I was talking about the element of the financial statement: revenue, expenses, income, asset, liabilities, and all of that. I noticed students were not really giving me what I wanted. They were their level, let me say, their concentration level was very, very dull, and very, very not encouraging at all. So I did something, and I asked someone that, do you think this thing is not important, whether you're writing ICANN or you're not writing ICANN? Do you think understanding how financial statements works is not important, or maybe because they cannot test it? So I did something for them. Last week was our revision class, so I did something very hard for them, right? Mid-diet revision class. And then I went to look for a particular question. If it was a practical question that I even had some colleagues of mine debating on, talking about reclassification of some particular items to. It was actually in the framework for financial reporting, right? So talking about reclassification of some items that has been classified under the other comprehensive income into the profit or loss. And I just did some things and I gave it to them. And only one person tried to actually solve that question. And I came back to that in the first week. I was telling you guys, do you think this thing is not important? Now I brought a practical question, right, that we have actually had a debate on, and no one could actually attempt this. So that is the major reason why, as you're an accountant, and many accountants out there, they believe, oh, all of these things are not really, they are simple. And you go to interviews today, you see people asking accountant basic things about the financial statement, and they are very, very hard for them to, come with and talk about it. So that is the major reason why. Do your homework, understand, do your assignment very well, understand how the financial statement works, that the input from the income statement and all of that is being taken to the statement of financial position. So the statement of financial position is giving a snapshot, right? So if you want to be if you want to be very good with financial analysis, you need to understand the financial statement, because some of these things that you'll be using to recommend, or you'll be writing on, or you'll be doing analysis on, and within the financial statement. And if you do not understand certain elements, how it works, so in the particular, I'm a teacher, like I said, so that's why I like to make reference to some of these things that I've seen right from time. So I notice many people, whenever they are doing ratios analysis and all that, I'm still going to talk about ratio analysis. They used to do something, they cram ratios and all of that. It's because of the reason why you still cram those ratios are because of you don't understand how the financial statement works. If I come and say return on capital employed, if you understand that what returns is talking about, and where can you find return? Return is inside the income statement, right? Capital employed. When you understand that capital employed is something that is giving you a snapshot of all those particular providers of capitals, right? What are those people? What are the figures, right? What are those things that those particular let me put it as those particular contributors to the capital that you have used to generate that income? You don't need to cram that return on capital employed is just your returns over the capital you have employed. You don't need to cram it. So if you understand that, oh, revenue, this is this. And if you say capital employed, it means that everyone in the company, right? But if you say return on equity, it means that only for equity. So you are looking at the returns and if you look at revenue,
so PBIT, public before interest and tax, it belongs to everyone. But if you want to use the one that belongs to only the equity, the return that the profit from equity is giving, the profit that you are giving the equity holders compared to the what they've given you, then you can no longer use the profit before interest and tax, right? You now need to use what? The profit that belongs to only the equity holders, which is profit after tax, right? And after deducting even some other equity, because it should be ordinary equity, right? So it's probably those that belongs to some other components of equity that are not ordinary shareholders, right? So you need to deduct that also, isn't it? So if you understand how all of this works, I'm telling you, if you understand that, oh, revenue, you understand income, you understand that, oh, if you deduct your revenue, if you deduct some of your cost of sales from your revenue, you arrive at your gross profits, right? If you deduct your OPEX from your gross profits, you arrive at your net profits, right? Which you can actually subject, or you can call it, depending on the work that you're doing, right? You can then call it maybe your profits after deducting interest and tax, or before interest and tax, or amortization and all of that, depending on what you are working on. So it's very important to understand if you want to be very sound with financial analysis. I'm telling you, one of the things that really helped me today in finance that I transitioned into is because of my core understanding of, my core understanding of accounting. You cannot throw away accounting. The best, I tell you, sorry, I'm going to bust some of our bubbles today. I tell you, the best financial analysts or the best researchers or analysts I have seen are usually economists. I was telling someone in my MSc class on Thursday, and I didn't even know that he studied economics as his first degree. Right? We're just discussing in class, and I was thinking, I really wish I studied economics in my first degree. Right? I'm not saying any course is not good and all of that, but I will explain why it is so. That economics make many. I've noticed over time. It's not maybe it might be my personal bias, right? But I have noticed over time that I've met so many analysts, I've met so many researchers, equity analysts, I've met so many financial analysts and all of that. And I noticed that many of them are usually from economics because they are very thorough. Do you know why they are very thorough? They have full understanding of everything we are doing, and also the macroeconomic environment, what drives certain things. In every of your financial analysis, there are certain drivers and assumptions. So it is very important to understand certain, and these people are thorough on it, right? And so that's the major reason. And he was like, I don't know that he's an economist. He did his first degree in economics, and he was saying, wow, what I said is actually true, because he too is currently experiencing. He studied economics as his first degree. Then I like to go for accountants because they have a very good understanding of which positions you well, right? The thing is, everybody has their own, but overall, I think the economics make the best analysts. I don't know why. I don't know why it is so. I don't know. I've never studied economics. My dad is an economist, right? But I have never studied economics, right? Or I never did any degree in economics and all of that. But I don't know what they are teaching them or what is causing this. But one thing I notice is that they are usually very good. But accountants this is where we need to milk on. I'm not telling you to be an analyst and all of that. In your company today, if you notice certain things are going wrong, probably the company is not going well the way it should be, right? You should be able to come up with certain models. You should be able to come up with analyzing just basic analysis. Take their financials, take three years back, try to understand trends. There are certain ratios. Now, let me just move to my next slide. I've spoken about income statement. Yeah, the cash flow statement also is very important. There's something called, I noticed I was able to run a particular analysis for a particular client in 2019. And with my analysis, I checked the income statement. The major thing that they had, their major problem was, cash flow problem, right? Cash flow problem was what they were having. I did my analysis. Their profitability was good, right? I checked everything I should be checking, and it was actually okay. Now, when I checked the cash flow statement, I noticed certain things. When I ran my analysis, I noticed certain things were actually wrong. And one thing that I could actually draw from it was they were actually over trading. What do I mean by over trading? It means that you're actually trading. You think it's not possible for you to over trade, right? No, it's very, very possible for you to over trade. I will tell you why I think a business can actually over trade. Now, imagine you are on the face of the finance. You use IFRS, isn't it? And IFRS says that, oh, when you can actually determine the cost of an item reliably, isn't it? And this is probable that that's 50% rule of thumb, right? It's probable that future economic benefits will accrue to the entity. You recognize it, isn't it? That means that if you have actually given something on credit to an entity, right, and you are expected to pay back in the future, you need to recognize, probably you have sold goods or probably you have rendered services, you need to recognize revenue, right? Although you release it back to the financial statement of financial position as a receivable, isn't it? So when I checked, I noticed that they were profitable, but they were still over trading because of their receivable collection days was actually very long. Their and which was not commensurate with their trade payable days. If you are looking at your receivable collection days in respect to your trade payable days, should be complementary. If you are granting your customers a long period to actually repay you, then your creditors also should be able to grant you. And they were actually holding so high stock of inventory, right? So all of this, if you don't understand how the cash flow statement, I checked their, one of the areas that gave it away to me was analyzing of the working capital. Yes, I checked the cash from investing activities, checked the cash from financing activities. They were not really giving me much clue like what I wanted, but immediately I saw the working capital changes. Oh my goodness. And it happened just in 2 years. I don't know what could have happened. The whole thing happened just in 2 years. So my analysis were focused, and there are times that you do your financial statement, you do your financial analysis, and you notice that some of the things that you are actually trying to assess are not driven by the financial statement. The financial statements are just the symptom of what is happening in the real business. I don't know how to make you understand this, right? It may be that, for example, they did really well. You see some people having over 150%, but does it mean that they actually performed well? A major something happened, and which was the Naira devaluation. They were holding dollars, they were holding foreign currencies. The Naira devaluation made those particular currencies appreciate in their hands, which led to so much profit for them. And that is many of us have heard of the windfall tax that the federal government is not only Nigeria, even in Switzerland, go to some other developed country, they're actually implementing this also, right? So that's that aside. So I'm just trying to say there are times that's why it's very important. Any financial analysis that you do that does not have your macro analysis side by side with it, then you are not actually doing financial analysis. You're actually trying to just do a trend analysis, only a trend analysis, and you're just trying to tell them this is what is happening with historical performance, and you're not trying any financial analysis that is not having forward-looking recommendations. Quote me, forward-looking recommendations, then you are still joking. So I have a few minutes to go, and the reason why I actually made so much emphasis on this is because of I believe these are areas that you need to be very thorough on as accountants. You need to do your homework on. There are various courses that you could take, and which I believe, even look at what HH Consult are actually doing. I actually commend them. So let's quickly talk about, by even extension, I've actually spoken about ratio analysis without knowing. So we have various ratios that you can actually use. I would actually explain this more when I project that particular slide that has the work that we are just going to look at. A typical financial analysis, how it looks like. So we have ratio analysis, talk about your liquidity ratios. Liquidity, if you don't understand, many of us are very guilty of this. If you don't understand how these ratios work, you cannot do anything on it. You should, if you want to know that you understand how ratios work. Nobody's talking about nobody's telling you that you should go and cram formula here. I'm telling you, nobody's telling you go cram current ratio, current asset minus current liability, divide. No, nobody's telling you current asset minus inventory divided by current liability. Nobody's telling you to do all of that. Do you get? I'm telling you to understand what's the major thing that you need to understand when it comes to ratio analysis is two things. What can actually drive that particular ratio? And two, what that particular ratio could actually impact that ratio can have on your operation. Let me come again. One, you need to understand what is driving that ratio. For example, now, if you say, let me take, for example, I love profitability ratios a lot. I don't know why. I love profitability ratios, although I use it alongside other ratios. And one of the profitability ratios that I love so much is return on capital employed. Now, you notice some entities, they will not dispose aging assets. They will not dispose aging assets because they know that if they dispose those aging assets, they will buy new assets, right? And those assets, you know how we calculate our capital employed, right? You know, we can use different methods to calculate our capital employed, whether it is current asset minus current liabilities, or whether it is, you know, equity only and all of that. So it's very important how you actually define your capital employed, right? And when you are doing your analysis, it's always good to have appendix. I'm going to show that also here. Appendix is where you explain key and glossaries, right? Where you explain certain terminologies or certain words that you have used in your analysis, and certain tables or certain guides, maybe you did some calculations. That's where you go to impute those calculations that you have done. You have shown them that this is how. It will not be in your analysis, right? Your real report. It will only be in your analysis, your appendix, right? So it should be well numbered and, you know, very articulate and clear. So the thing is, when you are doing, I was talking about ROCE. Some people do something, they will go and, by understanding ROCE, I understand that there are three key things that drives your ROCE. One, your revenue drives your ROCE. Two, your capital employed drives your ROCE. And three, your economic environment drives your ROCE. At times, your revenue might not really, you might not really have anything spectacular with your revenue, right? Then at times you might not have anything really spectacular with your capital employed. But the major thing that costs your revenue or your capital employed to have actually shifted, such that ROCE now is shifting, is probably some macroeconomic things that could have happened in those things that could have happened in the economy, right? Isn't it? So look at, for example, now we've been having every like for the past three meeting of the monetary policy committee, they've been increasing the MPR, right? Don't you think some of these things at the end of the year would have some particular effects on any analysis that you are doing? And it is very good for you to talk about all of this. So once you understand what drives this ratio, the key component of those ratios, and understand the effect that particular ratio can actually have on your business. Now, for example, for ROCE, I'll pick only ROCE. ROCE, when your return on capital employed is lower than the previous month, it is telling, you know, if you don't understand the impact that ratio is having on the business, you might not be able to do good recommendations. Because of, if you only understand what drives it and you don't understand what's actually the effect that ratio is having on that particular business, then there's nothing, you have just done nothing. Because of the essence of your analysis is to do recommendations. So if you are giving for you to give recommendation, you must understand the effect that ratio is having on the business. So ROCE now, it is telling you that, oh, this business, let's say probably last year, it had a 25% return on capital employed. Then this year is having a 15% return on capital. It's telling you that there's a variance of 10% that shows that the company is not actually giving back, or will not be able to give back to the contributors of capitals, right, compared to last year. And you should be able to talk about some of the things that caused this to happen. You might tell them, oh, revenue, probably during the year we saw that there was a government policy that said, okay, that actually put us, it might not be it might not be the sole work of the management, right? That could have, or the strategy of the management, could just be some things that could have happened, maybe government, and that's why I like to use. It's very good to understand how your environment works. That's why it's good to do your PESTEL analysis also. That's and you know, the reason why I don't really focus on PESTEL analysis and all of that is because of when you are thorough with macroeconomic analysis, by extension, you will talk about it. Many of us have done macroeconomic analysis. You'll be able to forecast inflation. You'll be able to forecast GDP. You're able to forecast our, maybe if to talk about deficit financing and all of that, and probably some other macroeconomic things that happen. Then by extension, you will touch it, because of macroeconomic is also looking at things that are happening in the external environment of the economy, isn't it? Of the business rather. So talk about, you should be able to understand profitability, liquidity ratios, leverage ratios. This, leverage ratios, if you're actually doing a financial analysis, I will still talk about some 5 points that could actually help us to carry out financial analysis thoroughly. So I would talk about the objective. You need to understand the objective of your financial analysis before you can understand tools that you will use to actually drive a good inference, right? So if you are, for example, now it is you want to raise probably a commercial paper, right? Don't you think that that commercial paper, where if you're actually doing a financial analysis for maybe an iWorks individual, that on a company, you're doing it, probably the iWorks individual wants to invest in a company and it needs a thorough analyst to actually assess or do a due diligence of the company. So you collect all the historical data and all of that. You should understand that what this particular person is looking out for is things that would actually protect his or her interest. So leverage ratios is particular about the ability, okay, they want to raise a commercial paper and you want to subscribe to it. You should be looking at their ability to pay back. Hope they are not highly geared. You should be looking at their leverage ratio. So understanding, and it's very important also, is to understand what drives the leverage ratio and the effects that this will have on the business, right? So if you understand the effect that it will have on the business, then it can help you also advise your clients very well, right? So debt to equity ratio and interest coverage ratios, efficiency ratio. Yeah, efficiency ratio is just looking at how you've been efficient in managing your assets, your liabilities, and some other things that could actually drive your statement of financial position, right? So how have you been efficient? Your efficiency ratio. So inventory turnover and account receivable, those are part of the efficiency ratios and all of that. So let's go to the next slide. I want to round this up. Good. Many times people like to mix financial analysis with budgeting and forecasting, right? In as much as budgeting and forecasting is there, but I would like to tell you that whenever you are doing financial analysis, it is very important that it is different from you doing budgeting and forecasting, although it is not very different, right? The reason why I will explain to you why I said it is a bit different from you doing budgeting and forecasting. There are some particular metrics you might not be, when you are doing financial analysis, you are very detailed, and budgeting and forecasting, let me say budgeting is only a section of financial analysis. Financial analysis is very thorough. It encompasses. So if you say, some people say, okay, I used to do budgeting for my company, I used to forecast for my company and all of that, so I'm doing financial analysis. Please, in your budgeting and forecasting, have you been able to tell them that, okay, next year expect this particular inflation rate? Have you been able to restructure their financials, right? You are just looking at, okay, this is possibly what they will incur. Have you been able to analyze some trends, common size? Have you been able to do some ratio analysis? It is very important. So importance, although it is very important when you are doing your financial analysis, but it's just, I would see it as part of your financial analysis, right? So by extension, you are doing budgeting and forecasting. So it is still inside. So the importance, creating and sticking to a budget can actually help business to control costs, allocate resources effectively, and plan for the future. So that's part of the things. Okay, did I go back? Sorry, I just went back. So financial forecasting is all about predicting future financial performance based on historical data and trends. Accurate forecasting can actually help business anticipate challenges and opportunities. So when you look at financial forecasting, it's just basically in the forecast, like financial forecast, right? You just forecast. But if you are not saying financial analysis, it encompasses those forecasts, those budgets, those historical data, those analysis of macro environments, those trends that you've analyzed. In fact, it goes even beyond looking at your strategies that you want to actually adopt. How viable are those strategies? So that's why I said it's also core in financial analysis, but financial analysis is totally not, you cannot say you are doing financial analysis and you're also, someone is doing financial forecasting and that person is doing financial analysis and you see they are doing the same thing, because financial forecasting is only an input for someone doing financial analysis. So can you see? So that's why I say accurate forecasting can actually, for example, if I sit down now, I'm doing my financial model, I come up with my model guide, my structure, my model structure and all of that. And the next thing I say I want to restructure my historicals, I want to build my assumptions and all of that. I want to do some scenario analysis. I want to do I want to do valuations and all of that. It's very vast than you say you are just doing financial forecasting. Do you get? So it's very important. So using financial analysis to drive business decisions, what are some five best practices, tips, and strategies to keep in mind for financial analysis? So number one, many of us that are familiar with with me on LinkedIn. I've shared this before. So the first thing is for you to clarify the objective. Before conducting financial analysis, you need to understand the purpose and objective behind it. So it's financial analysis is very broad. So once you understand what you are trying to do, it will make you understand the metrics that, or how you want to go about it, certain things that you need to go about it, right? So number two is using multiple ratios and metrics. Because of the company is, or that high net worth individual wants to invest in the company, and you feel leverage ratios and leverage ratios or probably investors ratios is the most important, you do not do any other thing, then you are deceiving yourself. The opinion that you might be giving might be very, very myopic, and it will not give you the right inference that you should be giving, right? So that's why we always advise that you use, instead of relying on a single ratio or metric, utilize a variety of financial ratios, metrics, just to gain a comprehensive understanding of the company's performance. Then you also need to consider non-financial factors, that is incorporating non-financial factors such as industry positioning, competitive advantages, management quality. Yeah, management quality also influences some of these decisions. You need to understand their growth prospects in your analysis also. Then another one is utilizing financial models. See, I don't want to, it's very important, it's very possible for you to understand, do financial analysis without you having to like do so much modeling or go in depth. Many of us are in the finance area. You understand that financial modeling goes more than all of these things that we are doing. It really goes far, far beyond some of these things that we are doing, right? But you can just use little understanding, and it's inside what I'm going to display, right? You can just use little understanding of financial modeling techniques to forecast future financial performance based on historical data, market trends, and assumptions, and all of that. Then communicating findings clearly. When reporting financial analysis findings, you communicate them clear, concise, and understandable in an understandable manner. So that is where I spoke about some automation tools. You might actually just need to understand little understanding of data analytics. It helps you, right? As I'm like this, I've actually although later I ran away, right? I've actually been in a class where I was actually learning various tools, although I might come back to it later. I will definitely come back to it later because I see it in the long run. It will be very useful for me. I've learned how to use R. I've learned how to use Tableau, learned Python, Python. I've actually done some things on Python and all of that. Although I ran away when I SQL, I ran away later. But in actually communicating some of your findings, you might be able to leverage some of these tools. You get, if you go to Power BI now, you can just use your pen, come up with some very good visuals and all of that to just make it look, some of these people don't have time to be reading all these, your analysis and all of that. But just imagine you are displaying a very simple chart, a bar chart, just to show, okay, this year it rose up, it went like this, or you are showing a pie chart, the allocation of, your probably the company has different revenue streams. So you are showing how those revenue have come from different streams. So you are just using a simple pie chart. You don't need to be complex. Make it very simple. Good team. I'll show you what that's why I actually downloaded of all of them from ResearchGate that I actually saw. I actually downloaded this because it's very, very simple. A layman can pick it up and just understand it. That's the essence. Communicating in your findings clearly. A layman should be able to pick it up and without saying, oh, these are jargons, and all of that. So this is where we come to practical examples and the case study. So permit me to quickly display. Let me display that particular analysis. So this is where I'm going to display it. So I hope so far we've been so just go to your chat box and drop your questions like Oyinda has actually pointed out. We are going to be dissecting them. Let me present something else also. Okay, just a moment, please. Let me open it. But so far, I guess it's not something that this thing I'm exposing us to is something that some people sit down for months to learn, to understand, practice, and all of that. So it's not something that I can just give away how to do many of these things in just 1.5 hours. I'm telling you, This is something. So let me display that. I have it right here. Okay. I have it right here. Very good. So once you can see it, just go to your chat box and type 222. Let me know that you can see what I'm displaying. So just go to the chat box. Help me with 222, 222. All right. Thank you so much. Thank you so much. Okay, let's get started. Look at the abstracts. Please, this is how a good financial analysis should look like. Choose a very comfortable team. Maybe the company that you want actually, maybe your company, the company that you actually work, or the client you are working for uses maybe green or uses blue. So just go for a very simple team, not complex, very something very clear and good, right? Some people just mix colors as if you see financial analysis. You look like a makeup artist, right? Why would your financial analysis be looking like you're actually making up, or you are doing makeup for someone, right? It should not be so. So just make it very simple, cool. In fact, many of the report I've had opportunity of doing. Currently, I'm working on a financial model that's I'm actually building my current. I started some weeks back. I've not been chanced to see, so it's not easy for me. Um, you know, it's very important to come up. I like to choose very cool teams, not to make it. In fact, left to me, I like mature teams. So just go with it, and you are good to go. Don't be scared. All right. Let me go back to that. Just a moment. Okay. So look at the abstract. So the abstract is just, many of us must have heard of something called executive summary. There are some people that they don't have time to be going through all your. So this is a financial analysis by someone I respect so much. Ogechuku is on LinkedIn. I'll give his full name, so you can just check him up on LinkedIn and follow him. I'm telling you for a fact that we have never had a conversation. This is someone I just admire from far, right? We have never had a conversation, but he's someone that I like. He's very good. He's an economist. Maybe that's one of the reasons why I love economists so much, right? He's an economist, and he's a previous ICANN prize winner. I'm telling you that we have never for once spoken. We have never had any contacts, but I so much. I used to read many of his analysis. He has done analysis during the COVID. He did some analysis on interest rate and all of that. I remember there was a particular time also. So it's very good. He's very good with the SAP, and he has worked with Big Four and all of that. So that's not about him. It's very necessary for me to give credit to whoever work I'm using to present here. So he has this. This is very good. We have the abstract. So abstract is just, in short words, you are trying to tell them what you have actually done. So anyone can just pick it up and understand what that particular, like your MD now, just pick it up and say, okay, so this is what all the things and your recommendation. If you look at this, the last line here, you see this study used a what if scenario analysis to what is a what if scenario? Many of us have heard it's sensitivity analysis. That's if this thing that we have actually said that will happen, if it does not happen, what will happen that will make this projection to go worse. So we are just trying to look at what will happen, right? So that's a what if. That sensitivity analysis. You can do sensitivity analysis to revenue, sensitivity analysis to cost, some sensitivity analysis to your capital employed. You can do it to any, depending on how you want to do, right? So this study used a what if scenario analysis to examine the possible outcomes for the company. It used 3 scenarios: the baseline, can you see, best case, and the worst case scenario. Based on the research, it appears that the company have stopped reporting expenses on advertisements and promotion on its profit and loss statement since 2013. It was recommended that the company should spend more on promotion and advertisements of its new brand in 2021, should work hard to control the cost of the firm. So can you see? So this is it. See your visuals. All these are not hard. They are just basic visualization tools. PowerPoint is also very important to understand. Many of us can do this on Canva, right? You see, that's why I said automation is very important. You must move with the way you can go to Canva today and just come up with use it to do your report, right? So whenever you are doing your financial analysis, the first thing to do is talk about the company, introduce us to the company to show that you know how this company is being run, you understand how it is made up of, right? Is it a private company? Is it many of you that are very sound in case study. I'm telling you that one of those courses that you should not joke with at the professional level is case study, because of if you are very sound with case study, let me tell you, let me now expose it to you. Do you know that financial analysis, I'm telling you today, that just to do a financial analysis today, some people charge as high as 1.2 points million naira. So least maybe 200,000, depending on the company, 500,000. So it's very important for you to, these are soft skills. And that's why I like to talk about skills. It's good to have the certificates, it's good to have this and that, but this is just skills. And on my LinkedIn page the other time, I was talking about the fact that ICANN or ACCA or some other ICANN examinations are not competency based. They will train you in all areas, right? SBR, you do SBR, you do some other case study, or SEMA, strategic case study. So all these things are training you. If you understand this very well, they will help you. Some of the things that laid my foundation in financial analysis was my love for case study, for management governance and ethics, now called CSME. In my class last week, I was telling students, ICANN students, in my webinar class last week with Oinda, she's here. I was telling them about how the first business plan I built for a company was just lead from the understanding of business plan in management governance and ethics. Who would believe, right? And I just used some PowerPoint and all of that, and it was good to go. So it's very important for you to do a proper introduction of the company. I will share this also. Probably I'll pass it so we can just go through it. I'll pass it to the right quarters that would get it right to us. Even my presentation slide, I'll pass it right there. Now look at the financial highlights. This financial highlights is just trying to give you a quick picture of what this report used just 2 years. You can use 5, you can use 4. So you see, they did a trend analysis, a change. Look at 21% from 2019 to 2020. Something changed, right? So there was the 21%. Another thing to understand, interpreting your ratios, is if you're able to interpret your ratios, right? I said something the other, understand what drives the ratio. Then 2, understand the effect that ratio is having on the business. So if that ratio is having a negative effect on the business, then it is telling you that whatever you have computed is an adverse result, right? From your understanding, that if you have actually pictured that, the effect that this particular thing that this particular ratio is talking about in this particular area is an adverse one, that means that whatever you have computed is adverse. So look at this now, revenue. If you just understand trend and you say, okay, it's 21%, and you do not understand that this 21% is telling you that 2020 compared to 2019, you are having a variation, an adverse result of 21%. Can you see? So look at it, even in brackets, giving it away. So that's the financial highlights, right? So let's move to the next. So this financial highlights is the same thing that we call financial statement analysis, right? So some people might be asking, why is this not in the appendix? So it's good at times when you are doing your financial, it's not even at times, when you are doing your financial analysis, it's always good to give a snapshot or probably little graphical explanations and all of that. So can you see that after the researcher here did this, then he spoke briefly about all these things that he has done here, right? So just a trend. Can you see how he has used a very good visual? I spoke about using a clear bar chart. See, very clear, simple, right? Guinness EBIT, looking at the growth in their EBIT over the years, changes in the EBIT, earnings before interest and tax. He also spoke about their market capitalization, net debt, enterprise value, right? Their earnings before interest and tax and all of that. See, it's very important. Someone asked me one day that how important is valuations to financial analysis, and I said, see, if you want to be very good in financial analysis, it's good for you to understand valuations too, right? So because of at times you might be working for a client that needs maybe for maybe a client, depending on the objective of the financial analysis, it might involve you doing valuations. So imagine you are not thorough on valuations. So I'm telling you might actually want to pass that work over. I remember one time I was not really sound on valuations, although I'm still working towards being very sound on valuations and all of that. But the thing is, there's no level you get to in learning. If you feel really comfortable, then you have not been growing. One of the things that would actually picture or make you know that you have grown is if you are actually looking at where you are coming from. Maybe last year you said, oh, last year I wish I knew this much last year. That means you have grown. So the following year is good for you to say, I wish I knew. There was one time that I will say, oh, I wish I knew this. Now when I say I wish I knew this much, maybe some years back, I wish I knew this much. So it means that you have grown. So that's the major reason why you are here, to actually upskill. Look at financial ratios indicators. You spoke about profit. Use appropriate headings. That's another thing I need to talk about. Use appropriate headings. Then your tone. Please, whenever you are doing your reports, always avoid the use of first person pronoun. I, do you get? We, no, we is still even okay. First person pronoun like I, like, or I am this. The thing is, you need to appear professional and exercise professional skepticism and show professionals. You see, you cannot open this report and you see someone saying that probably you have competed or you have done a financial analysis and you see that the company is not performing very well and all of that, and you now say, according to my analysis, the company is not doing well, the company is bad. You are not a professional if you are actually doing your report that way. That's why it's good to give room for professional skepticism, and that's why I always advise students, even during the case for those writing case study. What about if you use, probably you have computed the ratios and all of that, you are, you have done everything that you need to do. You can use words like, oh, from our computation, it might appear or it shows, right? From the computations, it shows, it appears, or it may seem as though that there are some indicators. You are being very professional, not like from what we have computed, the ratio is the return on capital employed is bad. The return on this thing is, it's from that to this is that. And look at some, I saw something now. Let me quickly show you something. Sorry. So look at this now. See, operating margin, okay? On average, all the profitability ratio indicators, this is where I am, please look at it, over time showed a decline. Can you see? Witnessed a weak, can you see how professionally this has been done? So look at, after talking about the profitability ratio, look at efficiency ratio, look at liquidity ratio and all of that, leverage ratio. See, look at the chart that's been used here to show your efficiency ratio for different years. Can you see? Look at asset turnover ratio as blue, inventory turnover ratio as the orange color, the AJH color. So can you see how the team, notice the team that has been used there. There's no conflicting colors, there's no makeup and all of that. I will share this. Look at, see, this report is it's simple when you are looking at it like this, right? But you need to invest so much time in research. You need to invest so much time in on using key tools, like I mentioned, those visualization tools like Power BI, Tableau. Right? Tableau, you might actually want to use. Even Excel is a visualization tool, isn't it? So it's very important. So I'm just taking us through all of this. If I see a very important area that I was talking about the other time. What is this? Look at this very important area, macroeconomic outlook. Look at the World Bank macroeconomic output is optimistic that in 2020. Can you see how I cannot, I'm actually looking at my time so that Oninda will not chase me out. So look at macro poverty outlook indicators. If you are forecasting inflation, look at inflation consumer price index. That many of us know that that's what is being used of, although many debate has been, we have the CPE, we have the CPI, apart from the CPI, PPI, CPI, CPE rather, and all of that. CPE is what is being used very, very well. Sorry, PCE rather is what is being used very well. So, understanding all of these things is very important. I'm telling you, as even with I because of the way I actually wanted to learn so much about how to do macroeconomic analysis. Even this year, I know how much I have spent that I've used to register for courses just to understand how you can do your macroeconomic analysis, understand some of these things, building models and all of that. Using in fact, you see some particular models. You use R square. You use a whole lot of things to understand. To know to derive, to reach inferences. It's very important for you to actually know this. So this is just a webinar to expose you to opportunities that lies in all of this thing. So that's why I'm always very, it's always funny when I see people, accountants, when they finished from, the other day, I get many DMs from people. Someone was in my DM and was saying, sir, I'm looking for a job and everything. I don't even know I got my WhatsApp, my business WhatsApp contact, and I guess probably it's over there on every of my socials. And he just messaged and I asked, okay, normally I don't do this, I don't reply, but I would reply you because of you are here already, right? My man. So he said he finished school 2 years ago and all of that, and he was saying, okay, he needs a job and everything. Okay, I said, what skill do you have? And this guy went on to telling me that he has good communication skills, interpersonal skills. He was just listing all those skills, and I was like, come on, are you kidding? You're no longer in the analog age, you're in the digital age. You're telling me, I'm asking you which skill, and I didn't reply him since then. Because I didn't even know what to say, because there are certain skills that if you have, you will not even work. On Friday, I posted on my LinkedIn platform about the gig economy, how many people are even freelancer. They don't even work with a company, and they are getting. You can be a financial analyst and you don't have any company that can say, oh, they lay claim to you that you are their staff. Because if you are actually having gigs, you can just work. When you are done with it, you drop it. And some of these guys, even some of these guys working in Big Four, they have gigs because of their skills, right? So the thing is, the financial sector is one area. I'm currently writing my thesis, and I'm talking about how my thesis is on how the financial sector can actually help the economy, can actually help strengthen the Naira. In some of my analysis, when I was actually doing my empirical review, I noticed something that the UK is not the best in terms of producing, there's this part of the sector, they have the services sector, financial service sector, and we have the real sector. The financial service sector is the blood life of the real sector, isn't it? Because of the real sector cannot live without the financial sector, right? So, and I noticed something that if you go to the UK, look at the real sector, what are they really, check today, what is the UK really exporting? The major thing that UK is exporting that is actually helping them to have a high GDP and helping their currencies, what is financial services, right? You go to the UK, you can easily have an overdraft on your account. You don't have to hold cash before you can buy. Even in the US, you don't need to have all the cash before you can get. You can easily walk into the bank and write, okay, you want to get a mortgage and all of that. Their financial sector is so strong. And with the age, with the way things are going, financial sector, I believe today, accountants should no longer be numbers crunchers. These are things that you should be versed with, right? Before financial people in the financial, let me say, investment analysts, investment bankers, equity analysts, all of them, they want to do some of this work. Now accountants are taking up some of these roles. They are not only there to analyze traditional historical data, right? So that is the major reason why you need to own all these skills. So look at the scenario and sensitivity analysis. So I will share this so you could just go through it. So I want to go to the appendix. Okay, look at your reference, very good to include. Then very good, your conclusion and recommendation. Some people can put conclusion separate, some people can put recommendation separate, but ensure that whatever you are putting in your conclusion and recommendation is not a deviation from what you have discussed in your analysis. Your conclusion should be drawn from your analysis. Your recommendations should be drawn from your conclusions, right? So it's very important. And the thing is, financial analysis gives you the grace to be very liberal. You can choose to do anything that you want to do it. If you feel, oh, you want to analyze this particular area, and you feel that it's going to help you to understand that objective that you are doing that financial analysis towards, it will help you reach more inferences. Do it. Look at this person here. He did the best case, worst case. If you want to do it does not mean that you need to follow the same method, right? If you are doing, look at changing cells. Can you see? There was a baseline scenario. We had a best scenario, worst case scenario. Look at sales growth rates. That's the current value, resulting sales, and all of that. So you see, when he was doing sensitivity analysis, he used some of these things. You can decide to, if you might decide not to use this, you can decide to do something different. So it depends. The major thing is to understand ranges of things that you can use for your analysis. Then depending on what, if you go to meet a doctor today, he will first listen to what your symptoms or what you say is doing you, how you're feeling. That's when he predicts drugs to you that can actually suppress or relieve that particular, or that can actually take away that particular sickness or illness, right? So that's how financial analysis tool is. No ranges of those tools, right? So depending on the objective, what you want to do, that's when you can now pull them off, right? So that being said, let me go to my appendix. So can you see this thing will get to you? I don't know. I can just change, rotate this, but this appendix, let me zoom in a bit. See something like this. Profit and loss account for Guinness. So can you see? This is the profit and loss. So he did a trend analysis. So an analysis of the ratios, financial ratios too are there. So can you see financial ratios too is there? So we also have the financial model. So the financial model, usually you cannot have a model if you don't have an assumption, right? Because of there must be drivers. Something should be driving your model, right? So this is just a little model built, right? So can you see it? You can just peruse through it and look at the scenario summary for 2021. I really appreciate this work. Amongst everything that I saw, that's why I decided to choose this. So the fact that he has done his own this way does not mean that you need to do your own to that way. So let me just do something. Time is going really quick. So I just hope I'm still within time. So let me present something to conclude on this because of my time. So if you have been enjoying the webinar so far, can you just give me 555? Just something to encourage me. I'm losing strength already. It's not easy talking, but if you leave me, I'm a teacher. I'll talk for hours. That's me any day. Thank you so much. Thank you so much, Sheon, Ujiola. So whenever we are looking at financial analysis, there are some common challenges. So we have data quality and availability. See, your data quality will determine your analysis is as good as the data you're able to pull. So it's very important that data that you're getting is very important. The data that you're getting is the data that you're actually using is very important. So lack of financial literacy. So this lack of financial literacy might not be from the angle of the financial analyst. Many times it's usually from the angle of those that you're actually giving those work to, right? So you see someone you have already done all of this, and the person is still asking you, what does this mean? What does this mean? They lack financial literacy. So it's not within our own capacity, but we can just put them through, right? There was a time that this is not even a financial analysis kind of thing. There was a particular financial statement I prepared then, and I noticed the previous year, the person that prepared the financial statement it was a particular asset that was revalued, and when that asset was revalued, it had a revaluation surplus, and IAS 16 mandates something that when there's a revaluation surplus on there's a subsequent depreciation on an item that has been previously revaluated, then you need to go to the OCI, first charge your depreciation. I don't know if you still remember all of this. So you need to also, so you need to go back and write off whenever you want to charge depreciation. First use that depreciation to write off the valuation surplus. How many of you still remember this before you now then later maybe you know there's no revaluation surplus again, you can now come back to your this thing, your profits and loss before you cannot charge accumulated depreciation there. So they did not do it that way. They were keeping the valuation surplus on that's pretty assets in OCI, other comprehensive income, right? And they were still charging depreciation. Maybe I saw it. I said, I flagged it immediately. I wrote it down somewhere that I need to look into this later on. So what I did was I did a retrospective application, and I did it like it never happened. I just brought it back and I went to offset it. I raised the journal for it and I went to offset it from the OCI. And immediately the person that I was working with raised eyebrow. That, what happened there? What happened there? I want to know what happened there. This and that. And I said, okay, I will explain to you. Then I sat her down. I explained that this is my basis for doing this and all of that. That is financial literacy. You are trying to educate them. So our role is to educate them, right? So 3, over-reliance on historical data. One of the challenges that we have is we cannot do anything with our historical data, but at the same time, we must not rely too much on historical data, right? So at times, that's why, and some of these things that we do, they are usually, it's only God that is 100%. right? Only God knows. That's why whenever I'm using R square in my model and I'm actually doing a research, R square must not be more than 1. If you do any analysis or build a model and your R square is 1, your computation when you have done, you have given room for your error, your beta 1, beta 2, and all of that when you are building your model. And your R square is more than 1. Any way that you have computed your R square, if it is more than, if it is 1, then that particular inference is wrong. I'm telling you, it's very wrong. So that is the major reason why whatever we are doing, we must leave that room for, the fact that it might not be, there's still error. That's why whenever you're building model, there's still a particular gap for mu, right? For error, right? So it's very important. So that's over reliance on historical data. That's another challenge, right? So what I used to suggest is for you to actually compensate for that over reliance on historical data, it's very good for you to please ensure that whatever historical data, that's why you will see whenever financial modelers are doing their prepared models, they will restructure those historical, those jargons. They will restructure it. We will restructure the profit or loss. We will restructure the other statement of your financial statement of financial position. You restructure it. So you see, we are trying to bring it back to make it look well. Whenever you that build model, you understand this. So another one is complex and time-consuming processes. Don't let us lie. Some of these things could be complex and time-consuming, but at the same time, you need to still be thorough. Another one is resistance to change. Resistance to change. Yeah, you have seen, like I gave you an example of that my relative that I actually told her, okay, they've had it in mind that they will get that franchise and they didn't follow whatever I told them. And today, I don't know, I don't want to mock them. It's not yielding the best results because it has really played out really bad and so some people might not want to change, right? That's another common challenge. Then we also have interpreting and acting on results. Yeah, are you following, which goes with resistance to change? Are you following those things that we have actually spoken with you about? Are you going along with them? Are you acting on those results? Then lastly, I don't know, let me see. Just a moment. Oh, I've gone more than just a moment. I shouldn't have gotten here. So I gave some solutions. Okay, interpreting and acting on results. So I'll just listed some practical tips and tools to streamline the financial analysis process. We have the use of software tools. QuickBook, software as a system, all those, service as a software company, right? They are usually, QuickBook is one of them. It can actually help you streamline your accounting processes. QuickBook can help you generate if you understand QuickBook, it can actually help you generate your trial balance. It would actually help you come up with your financial statement and you're good. Real-time posting and all of that. So it could actually help you automate your process, make it simple for you. It helps in accuracy of the historicals. We have Microsoft Excel, which is actually good for analyzing your data. You can use your pivot table, you can use your slicers, use your different tools and all of that, charts, bars. You get. So we also have Power BI, which is also doing this. Do you know that these days you can actually have some AI tools that could work inside all of these things? How many of us have heard of Copilots? Copilots could actually help you do some of these things, but if you don't really know the thing and use Copilots, it will not add professional touches to it, right? So if you know the thing very well and Copilot does something for you, you can easily see, tweak it a bit, make it look, if you don't understand how something works, you just work with whatever Copilot gives you, right? Then 2, automation. I spoke about automation also, right? Making a lazy accountant as an automated accountant, isn't it? 3, regular training and updates. That's what we are doing today. I was telling someone that the amount of money I've spent on the fact that I'm in the public sector, the kind of money I have spent on training, exams, certifications. Recently, I paid a particular exam in Canada, about $700 and all of that. So it's very important that you spend, these things and dedication to it also. It's easy to pay. And you say, I want to chase it, I want to chase those trainings, but you just find that later on during the halfway, you are not motivated like you were during the beginning, at the beginning again. So I think Ida wrote a very good post on that on LinkedIn. It actually spoke to me, right? So it's very important. You could actually check that out. Then lastly, standard operating procedures. Yeah, you see, whenever you are doing financial analysis, these are people that these are for managers, and probably you are head of departments, or probably anywhere you are in your company. Please ensure that any way that you do your financial analysis in your company, it is you have a standard operating procedure, so that if you have interns, if you have people later on, there's consistency the way you do your standard up. So you should have a document that will standardize maybe the team, the font, your analysis criteria, and it needs to be updated from time to time. So it's good to keep a standard operating procedure. So because of my time, that I've really spent so much. So I'll entertain Q&A, interactive discussions. Let's have it. Normally we should be done with this, but
Okay,
sorry
thank you
about.
so much, Mr. David, for that session. Thank you so
Okay,
much.
thank you so
Okay, I
much.
think we have one question in the chat room. Okay,
Okay.
somebody is asking that can you recommend courses or programs that can help on to perfect their financial analysis skills? Like, can you recommend courses or programs that they can take?
Yes, sure. The thing is, there are a whole lot of, we are in an age that you don't even need to go to school before you can learn something. If you go to YouTube, you see some of these things there. If you go to Coursera, you see some of these things there,
Yeah,
right? If you go to, there are a whole lot
LinkedIn
of them.
Learning.
LinkedIn Learning, thank you. So it depends on your access to information. So what, there are also, I have various, like Oyinda now,
But
she's
over
coming up.
time, which one have you done?
Okay, the one I've done, actually there was this particular course that I actually had opportunity of going for. I don't know if it's still on Coursera in 2020. So I actually is on financial analysis, and it did not only have financial analysis. Like, maybe if I check my learnings, some of the things I've actually done before, I would point us out to it, but I can't really remember it. This thing, but it's part is on financial statement analysis. Then it's also branched a bit to looking at basic Excels, looking at some
Is it
functions.
CFI's FMVA?
No, it's not CFI
Okay,
FMVA.
not that one.
Those
Oh,
is that one too is also there, but it's costly for you. That you could just take basic courses on Coursera. On there's another one too that there's this guy. Please, if you are here and you want to upskill, you want to learn very, please go to X. There's one account that you must not do without following on X. I've never spoken with him before. We've never had any conversation. He's not promoting anything with me, but this guy over time is very consistent. His name is Omar Alaja. He used to share free Udemy courses that you could have gone there, and you see that many people are following him. By the time he shares free Udemy courses, and he shares the code to actually get them, within few minutes it's gone, and it has exceeded the number of limits, right? So always, in fact, I have notification on for him, and I have several courses that I've not even watched yet that I know it to be useful in the future. So just go there, and you don't need to pay, because I understand some of us are in the every accountant or every professional have their own life cycle, right? So probably you're still in your introduction stage, so you don't have the money to actually pay for courses yet, right? So it's very important for you to look for free courses that could actually help you. So that's why I don't advise you go. But if you see that you have the money, it's good now. You can always Delmich Academy. Yeah, Delmich, my very good friend Michael Adeli is hosting his finance school. Where they get to teach you. I'm a product of the school. I learned macro analysis from Delmich Academy. Macro analysis, very sound one and everything. Different meeting sessions, videos that you can all. I have it in my drives today. I can still go back and watch it, right? So there are a whole lot of areas that you could actually tap into.
Thank you for that. So the second question is, how do we bring in the future? So Luakemi is asking that, how do we bring in the future? You can also check into the chat room to also process the question. How do we bring in the future into our analysis? Since financial statements, cash flow, and the other financial statements are used in the analysis, are historical. So where does the future come in, and how do you bring in the future to the analysis? Thank you.
All right. Thank you so much for that question. You see, that's why whenever we are doing our analysis, there's usually something called the driver and assumption. I said something the other time that only God is perfect, right? So we can actually pick the way, there's this thing, the idea behind financial statement analysis. There are two, many of us are familiar with how finance work. There are two basic analysis that we do. We do fundamental analysis and technical analysis. Technical analysis is the major thing that drives financial analysis, because of we are using historicals, we are using trends. So we are using it to predict how future would actually pan out. But where the future comes into it is because of it, we don't know what will happen in the future. It is what is happening now, or probably something that happened before, that we can use to predict the future, right? So that is the major reason why it's always good to, you don't do this in isolation, right? You are using the historicals, but you don't do this in isolation of the macroeconomic environment, because even with your own analysis and all of that, you are still going to need the macro environment to actually look at how those your analysis will play out in the future, right? So that is where we are trying to link it up with the historicals. So the historicals, if you have done a proper analysis on your historicals, and you have actually used the right tools, right? If you are not perfect, that's why I said it's only God that can have a perfect model or a perfect research analysis. But you need to be near, to be very close. Your error, whenever we are building model, there's usually something called error. So it should not be far off. Your error should not be far off. Deviation, we call it deviation also, right? It's coefficient of deviation. It should not be far off. So that is the major reason why we use all of these tools, because of we are trying to project the future, and only God knows the future. But if you are able to use all of these tools very well, you are able to understand your macroeconomic environment, you have been able to restructure your historicals, you've been able to understand how it has been coming trends. That's why it's always good to use not just one metric. It's good to use different metrics, right, to predict the future. But there are some particular objectives. You might be doing financial analysis just to understand how the company has performed. You might not need to talk much about the future, isn't it? You just want to look at how the company has performed, right? So that's why I still say that whenever you're doing financial analysis, understand the objective why you are doing that financial analysis, right? So if it is a forward-looking, maybe they said they want to actually raise debt, or probably they want to look at how the company can tap into future opportunities, then it is future looking. So that's where you could actually understand some of the tools, some of the analysis that you need to do that would actually help you project into the future, right? So that's that about that. I hope I've been able to answer that.
Okay, thank you so much. Thank you so much. So there, like you said earlier, that there are resources that people can use. So in the light of resources, I remember while starting out, I was always
resources that you
somebody
can
has a
use.
question. Yeah. So like most times when you say YouTube has a lot of people that YouTube can make you confused, right? Like when you say
Exactly.
Coursera still makes it more structured, so to
Yes,
speak.
yes.
Yeah. So we would like to appreciate everybody, and I'm seeing one of my senior bosses on the call, Mr. Israel from Accounting Yard. We are happy to have you on our meeting today. We don't take it for granted. Thank you so much for coming. We're having the big shots in the house. Really, really appreciate you, sir. And for other dignitaries that may not be my network that I'm aware of that is on this call today, thank you. Even our speaker himself is a big shot. A public sector professional, like chartered accountant. Is it chartered accountant general of the federation that we should be gunning for? What's the plan, Mr. David? Thank you, everybody.
That one is coming in some years to come.
Yeah. Thank you
Sorry,
for the
I saw
changes
someone
you are
here,
making.
Makuleta Hanaba. Someone is
Okay.
asking something
Okay.
here. What is
I
the
think it's
full name of
regarding Mr.
Ogechukwu you mentioned?
Okechukwu.
Yeah, on
Yes.
LinkedIn. So his full name is Utazi. Yeah, his name is
Utazi.
Utazi Joshua. He's very sound with
Okay.
analysis. Utazi Joshua Ogechukwu. So you
Let
could
me
just
know
go
if
and
I spelled
search.
it right in the
Yeah,
comments in the
Utazi.
chat room.
That's his name.
So thank you so much. Yes, the slides will be shared
Utazi Joshua.
Yeah, the slides will be shared on the WhatsApp group chat where you got this link from. So thank you so much for
Exactly.
spending your Sunday evening with us. We hope you came up or you took away some
My
insights
pleasure.
from
I really appreciate.
today's webinar. Thank you for your time, Mr. David. Thank you so much. Thank you so much. We hope to call you on future webinars, right? Thank you, thank you, thank you so much. Have a blessed week ahead. And don't
Thank
just
you
be
so
number
much.
crunchers. Let insights come out of the analysis you are doing. Make
Thank you so much.
recommendations that
And
will
you
move the
too.
company forward.
Bye.
Thank you so much,
Yes,
everybody.
so
Yeah. Bye.
That was very
it's very important. You're welcome.
We are expecting your feedback on the group. For people that are on our WhatsApp group, kindly share your feedback on the group. Don't just ghost us when we ask for feedback on the group. Thank you so much. Bye. I'll be ending the call now. Thank you.